for the older listeners of REM in the room. But for this section, we're going to talk about whether the fintech era is coming to an end and how it's transforming. And Sophie Guibaud from Openpayd is going to set out her vision for the future of finance and the impact that embedded finance is going to have on both the industry and our everyday lives. Sophie is the Chief Growth Officer at Openpayd and is responsible for revenue growth and leading marketing, sales, customer success and corporate development teams. She's spent the last 10 years developing and executing the go-to-market strategy for banking as a service and embedded finance propositions across Europe. And she's going to, as I said, she's going to give her presentation, then join us via Zoom for a Q&A session. So have a think about some questions. Ladies and gentlemen, please put your hands together because she can hear you via Zoom for Sophie.
Hello, everybody. I'm very glad to be part of this festival today. I wish you a good afternoon. I'm Sophie Guibaud. I'm the Chief Growth Officer of Openpayd, which is a banking as a service provider based in London, launched 3 years ago, that provide corporate banking and payments to specific segments such as crypto, digital economy overall, and their end customers. Before that, I spent 3 years at another banking as a service provider, Fidor, for who I launched a retail bank in the UK, and then basically sold the platform to tier 2 and tier 3 banks to launch their neo banks. And before that, I was at Bankable, another banking as a service provider. So essentially, banking as a service is my passion. I think we are at the beginning of a revolution embedded finance, and that's the reason why I will be talking to you about that today. Is embedded finance the end of fintech as we know it? First of all, what is embedded finance? Embedded finance is the fact of enabling brands to offer financial services directly to their customers whenever they need it. Where are we now? The market has evolved quite a lot over the past 10 years. Fintech disruptive promise is coming true. Legacy banks, well-guarded models are dying out, and across all verticals, from banking to investments, a new wave of challengers are turning financial services upside down. Essentially, Fintech have totally reinvented the value chain of financial services to offer more digital, faster and better service, and cheaper as well, services to their customers. And why have the banks been attacked? They are indeed showing that they are losing their dominant position step by step. They have been, on one side, unable to keep up with the pace of innovation due to their core banking system that dates back from the 70s, and that makes it difficult to actually innovate on the back of that. The repeated crises in the 2000s made it quite difficult to focus on innovation while they needed to implement new compliance rules and regulations. And also, essentially, culturally speaking, it's difficult to move to like a total organization towards actually talking directly to the customers to design the the experience they want. And that's the reason why challenger banks basically have arrived. And it has been the first steps. Challenger banks have focused on improving the experience, providing better and cheaper service, but also focused on specific niche of clients that had specific problems that they were trying to solve. However, it was just the first step. The next step of the evolution is embedded finance and enabling anyone to offer financial services, not only neobanks. And embedded finance is enabled by banking as a service. What is banking as a service? Essentially, it's providing the ability to anyone to access to financial licenses and infrastructure to operate financial services propositions for end customers. It's made of different layers and players, which includes the license holders, the tech providers, and also the distributor of the service, essentially the brands. And the benefits of such services is that brands don't need to become masters at financial services themselves, at designing it, investing massively into the tech, as well as getting licenses. They can fully rely on banking as a service providers to enable them to do that. And how does it look like, this banking as a service stack? So as you see at the bottom, there is the license holders that provide all the infrastructure, regulatory infrastructure specifically. Then on top of that, you have all the banking stack, which includes the compliance, risk management, the payments, the accounts, financial crime, everything you need to essentially operate financial services positions. And on top of that is basically the end customer interface, which is developed by the brand. There are different ways to operate on the market. You have some banking as a service providers like Openpayd, for example, which are the tech providers and the license holders as well. Others, such as Bankable, have made the bet to only focus on the tech and actually partner with license holders to provide the solution. And finally, companies such as Fidor, my former company, focused on or used to focus on the whole stack, which was to provide the tech solutions, the bank and the operation as a service. Since then, Fidor has restructured into a tech company and on a bank on another side. So it's a model that has essentially evolved. We could compare banking as a service as Amazon Web Services for finance, essentially, because think about how radically Amazon Web Services has changed the game for digital businesses. This is exactly what banking as a service does for brands and digital businesses. It enables them to offer banking services to their customers, to increase loyalty, to develop new revenue stream, without having to make big investments, as banking as a service providers are doing the heavy lifting. And what matters the most for a banking provider is, of course, the tech stack needs to be top-notch. I believe that licenses are also very important to be able to follow customers across their different geographies. But ecosystems and partnerships are also essentially crucial. And this is what we focus on at Openpayd. It's essentially our tech, our licenses, but also basically the different services that we distribute, making sure that we have global partners and local partners in the FX space, in the card processing space, that enable to design new propositions for our customers and follow them across geographies. One of our top segments, for example, is the crypto space, specifically the crypto wallet. Initially, crypto wallet, if you remember, 2 years ago, were really focusing on just essentially the trading. So like you were coming with your coin and then exchanging it on the platform. That was the only thing you could do. Then essentially crypto wallet asked us for card processing because they wanted to actually reach the masses, so like become more accessible to the people to do trading on their platform. Then they came to asking for banking. Pooled accounts or virtual IBANs for their consumers to be able to top up their wallets and then trade it against a Bitcoin and then trade it onto their platform. And the last evolution of embedded finance is now the move onto open banking, because those platforms actually want their customers to stay at all time on their platforms rather than having to top up their accounts from their regular bank accounts. So basically, like, the market has changed a lot over the past 2 years. And this is how we are seeing like this embedded finance evolution, is that we moved from those players asking from one services to actually the whole payment journey for their consumers. And suddenly, what banking as a service enables is that everybody can be a fintech company. And it's what Angela Strange of Andreessen Horowitz believes, is that every company will be a fintech company. And I believe it's true because now banks can actually, brands can actually launch their financial services, and you can think of plenty different applications in plenty different industry. But we are not talking about the future. All of that is actually happening right now. For example, Uber launched banking products in Mexico with BBVA, which served as banking as a service provider for their drivers. Another example would be Grab, who now has financial services revenues that are as big as their like restaurant and driving services combined. Same for Shopify. Now, actually, half of its revenues come from financial services. So there is a massive move where we see actually big brands making the move into financial services, and then financial services becoming like their biggest revenue source. Why is it good for brands? For brands, it actually enables them to increase customer stickiness. It enables them to increase customer loyalty and love for the brand, but also create new revenues, as we have seen for Shopify and Grab. For consumers, well, they have more choice in financial services, like in terms of providers, but in terms of solutions as well. They can basically get those services at the provider they like the best, but also they actually get those services at the time they need it. So if we go back to bank buy now, pay later services, essentially they enable to get the funding at the time you need it when you make your shopping. So instead of going to your bank account, you get it when you shop at checkout. So it's just a much better experience. Why is it good for legacy banks? It's not only good, but it's actually their salvation, I believe. The traditional banking model is being shaken. I believe that they will still focus on serving their core niche markets, but I think a big part of their growth can definitely come from actually enabling banking as a service and transaction banking from brands. If we take an example, for example, Goldman Sachs that went into transaction banking and that is now powering Stripe, it's a great example because like what does Goldman or even Citi, Bank of America need to do? They just need to provide the rails, and Stripe is basically leveraging on its existing customer base where a need has been identified to upsell services to this customer base. So Goldman, Citi, and Bank of America actually rely on the expertise of Stripe, on the audience of Stripe, to be able to actually have a very big impact in terms of revenues while having basically little impact in terms of resources once the platforms are set up. Banks are going to look like utility companies. But it's going to be a crucial role. Their consumer-facing business will be scaled back, as I have mentioned, just on their core customer segments, but they will be able to extend to many different other segments through banking as a service. So it's essentially their value proposition like changing, but expanding as well, because it's new area of growth. What they will be most rely on is, of course, the access to rails, to correspondent banking, but also their deep understanding of license and regulatory requirements. That is their expertise, and that they can make benefit a lot of players in the market. But that is not symbiotic, is symbiotic, not combative, which means that banks need fintechs as much as fintech needs banks. All the new wave of fintechs have been creating on the back end of banks, and this is gonna evolve like that. So essentially, banking as a service basically provide a great opportunity for banks to create new revenue streams. while enabling brands to launch new financial services for the benefits of their customer. So just to summarize quickly, today we have covered embedded finance, which enables basically any brands to launch financial services to their end customers. Neobanks and the first wave of fintech was just the first iteration of like the power of fintech and where it's going. Essentially, I believe strongly, as Angela Strange has mentioned, that every company will be a fintech. The reason for that is that basically customers don't care about banking and payments. They care about convenience, and it is what embedded finance enables brands to do, is to provide banking and payments at the point of context when the customer mostly needs it. To finish, there is a massive opportunity not only for tech providers and for brands, but for banks to position themselves as banking as a service provider there, and create for them basically new revenue and growth sources by relying on the expertise, audience, and distribution network of brands. Thank you so much for your time. I hope you enjoyed the presentation, and I will be happy to answer any question you might have in the follow-up Q&A live session.
Thank you, Sophie. Ladies and gentlemen, put your hands together for Sophie, who joins us via Zoom. Sophie, bonjour from Australia. Merci beaucoup.
Hello, everybody.
Now, we're going to open up for questions, so if you do have one, please put your hand up and Art will bring you the microphone. But I'm going to kick off with one around cryptocurrencies because you're involved with it, with Openpayd. I'm kind of looking at it at the moment and thinking, really, it's a market that is based on how Elon Musk feels when he gets out of bed in the morning. Where do you see the opportunities for fintechs in this space?
Oh, that's a good one, and yeah, like we have seen indeed the impact of what Elon Musk said last week. What I would say from a trends perspective, so as I have mentioned, around 2 years ago, we have seen essentially the crypto wallets coming to us, asking to help them bring essentially crypto to the masses by giving access to anyone to crypto, by being able to do a simple bank transfer and card payments essentially. So I think we are going towards definitely a democratization of crypto. In terms of opportunity, I think there is a lot of opportunities still around the crypto exchange market, in the sense that, of course, there are like very large ones such as Binance and Huobi and Coinbase, etc. But there is still opportunities to actually like keep on working and democratizing it further by making it easier and easier to access the crypto market. And I'm specifically thinking of a company which is also a client of Openpayd, actually, which is Ramswaps, which has made it so easy to buy cryptos that it takes you literally less than 1 minute to do that. So I think the opportunity is really to focus on making it much more accessible to people and essentially focusing on making it an alternative investment method or tool for people as much as shares and currencies and gold can be essentially.
That does sound like an exciting opportunity. Now, we're going to open it to the floor. When you ask Sophie a question, just please identify who you are so she knows who she's talking to. And you can't see us, but we are in a room full of people not wearing masks. That's how lucky we are here right now. We hope you're staying safe where you are. Now, I've got a question up the back.
Hello, Sophie. How are you? My name's Yanni Akili, and I'm from a company called Industry & Co. Banking as a service hasn't really yet taken off in Australia. And there's lots of reasons for that, you know, early movers, regulators, etc. Can you give us some insights into, I guess, how in other parts of the world it's really got traction?
Yeah, actually, that's a great question. Like just to play back a bit of an history of the thing, I think like basically it really started getting traction in Europe specifically with the new wave of neobanks. So, and it was at the beginning of 2010, 2012. Essentially, like those companies, there was a need to launch those companies in the market because, as I have been mentioning, like essentially the banks hadn't moved yet too much into digital and didn't offer any specific target segment solutions. So essentially there was on one side all those companies and all those concepts that were ready to get launched. And on the other side, essentially some people that saw the opportunity to empower them to do so. And it allowed essentially those neobanks to focus on their proposition, acquiring the customers, the branding, launching new services, and on the other ones to actually just focus on providing like the tech and the licenses. So this is really what has driven the growth in Europe. I know that in the US it has also been developing quite a lot. I think it's in a different shape, let's say, or way, because while in Europe we tend to have some kind of one-stop shop solutions such as Openpayd or as Fidor or as Railsbank and Solaris. My understanding is that the US there is a lot of tech providers and license holders that actually partner together to actually help launch those propositions. And again, in the US, I believe it has been mostly driven by basically the launch of new credit proposition and different variations of neobanks, essentially, but mostly around credit, helping build your credit score, like basically also propositions like for youth and that kind of thing. So I think banking as a service providers appear when there is a need to like, or there is a market need to do so. So I'm not so familiar with Australia. What I know is that you have like at least one banking provider that has banking as service provider that has launched there, which is Railsbank, which means that they probably think that there is an opportunity. Now I think it's about taking the time to give or to give the time to concepts and new companies to launch on the back of it. A last point on that would be that most of the time, banking as a service providers, when they are not the banks themselves, need banks support to do that. And since very early on, in the UK specifically, there was always this support from banks to actually launch banking propositions. It was specifically the case of HSBC very early back in the days that helped to launch, I think it's Sainsbury Bank, there was Mark & Spencer banks, all that kind of thing. So basically they were at the back of it. So there was essentially like this support from banks, seeing it to be an opportunity for them. Now we have seen the move in the US where we see that Bank of America, Citi and Goldman Sachs actually have made the move into it, becoming banking as a service provider. So my last point really would be that for it to really take off in Australia would be for, and again, apologies for my for not knowing much in detail what's going on, but it would be that one of the banks actually decide to go into it, to give it a chance. I think it's a great opportunity for banks to actually just find growth through distribution, through brands, essentially.
Thanks,
Did
Sophie.
I answer your question?
Yep. Now, have we got any more questions? We do, gentlemen over there. In the meantime, just quickly, open banking is less than 12 months old in Australia, the consumer data, right? And we're all trying to figure out the way forward. The possibilities as banking as a service, when you look at the UK experience, how quickly do you think it will accelerate and change?
It all depends from the banks and the push from the regulator. So I actually would like to take the example of the UK versus what's going on in Europe. So in the UK, like banking as like open banking is there. So it means that we are not anymore only on account aggregation. We are in payment initiation, and actually, like the UK, beyond PSD2, which is enforced by Europe, has created their open banking initiatives to actually like make it even more strategic. So essentially, the propositions are there, customers are using it. Like now, I have seen some data that specifically neobanks propositions, around 30% of top-up of accounts comes from open banking payment initiation. So that's huge versus card processing. So that's really, really big. However, for example, in countries such as Spain, Italy and France, it's taking more time, and banks are still pushing for screen scrapping as opposed to actually doing real PSD2 APIs. And it means that the experience is not great. They have been gotten some pushback from the regulator, but the experience is just not great. And launching such a proposition, I mean, you know that the customer experience won't be so good, but you can give it a try. You just need to know that your customer needs to be patient, because sometimes it's going to fail. So essentially, it really depends on if the banks are embracing the thing and are actually seeing an opportunity behind it and creating real dedicated open banking APIs, as opposed to just push for screen scrapping because they just don't want to open their box and create the APIs, but also how strong the regulator stand into enforcing it, essentially.
I think we've got an enthusiastic regulator out here, so we'll see how that goes. Now, we've got a question over here.
Hey, Sophie, Sheehan Tan from the National Australia Bank. Just interested in your perspectives around what you think the limit could be for banking as a service. And, you know, in particular, I'm thinking about, you know, as you start to move up the product complexity scale into sort of medium to corporate business propositions and whatnot. So interested to get your sense around where the limit is, if there is one.
Oh, that's a good one. So at the moment, I would say the proposition for larger corporates is limited, yet there is definitely a need, and we are getting there in terms of treasury. And this is definitely basically what Goldman has been doing with their TXB platform, which basically caters as much to brands, to large corporates that actually want to facilitate their flows and make it just more automated. So I think we are at the very beginning of it, because there are not many propositions in that sense. Also, larger corporates tend to work with larger banks, which means that essentially those propositions need to come from, or those banks need to embrace such propositions. Now we can think, and I'm thinking specifically as a player which is called Modern Treasury in the US, that aggregates the APIs of those large banks to actually distribute it under a much more evolved platform. So it would be a way. So it means that banking as a service could be really an empowerer of improving operations and treasury management of larger corporations.
Sophie Guibaud, thank you so much for your contribution to Intersect today and for telling us a little bit more about the future as well as the end of FinTech. Ladies and gentlemen, please put your hands together for Sophie.
Thank you, guys.
All right, now we're going to kick on with this theme of embedded finance with how to democratize access to the